Hello members, so this is my first video for our video library and I'm going to be talking about the G7 trading system and the trades that we're currently in right now. I've literally just recorded half an hour of a video and forgot to put the microphone on. So there you go. This is going to be uncut, unedited, just sort of talking directly to you, looking through the charts, so there could be a lot of ums and ahs and hisses and clicks and hesitations and faffing about and a lot of breathing noises which seem to come through the microphone, but that's okay because what we're doing here is just trying to do a training session. I'm going to be putting up a library page on the website. I'll be posting up the videos as I make them in our live Telegram, so you'll be able to see them there, but I'll also give you the link to the members page, which will be for members only, and these videos won't be on YouTube. So having said all of that, let's have a look at what we're in. We're in 3 trades currently. So I'm going to talk about those 3 currencies and explain to you the rationale behind each one of them using the G7 system. First one is in the Euro US dollar. Now a couple of things, and I hope I don't forget everything. I've got the G7 chart set up here. This is an hourly chart. If you have a look at the G7 weekly chart, now remember the weekly chart, go and have a look at the book. I've put the link up here. I'll put it on the library as well. The link's in the Telegram. Go and have a look at it. The G7 system is something I designed actually literally 21 years ago. And it's kind of the basis for the way I trade the markets in general. I don't always adhere to it perfectly or strictly, but it's a really good guideline for trading overall. Excuse me. And if you're ever in doubt about the markets or need any guidance or any general direction, anything that you're confused about, you can always go straight back to the system and say, okay, what does the G7 system say about the markets? What have we got going on? And try and dispel any doubts. The worst thing in trading is to have doubts about direction, about your trades, and about everything that you're doing. And if you can get some form of structure using a system like this, it's brilliant. So first of all, as you'll know, read the book. On the G7 system, first thing we look at is the weekly charts. I haven't got the 10-week moving averages in here, but I can see where it would be. And basically you're saying what's the direction for the euro, and we look at the weekly chart candles, and as long as we've got lower lows and lower highs, the direction is down until we get a spike on the weekly charts. Go and have a look at the book. It's really important that you read it and understand it. Looks like we might be forming a weekly spike right now. We got a spike low on this weekly candle, but we have a lower high, another lower low, and we've had that for the last, well, 1, 2, 3, 4, and this is the 5th week of the same sort of pattern. Beware of the spike low though. So we know the direction overall is down, so we want to be trading short. Let's go back to the hour chart where we were just now. And this is the hour chart. Now if I zoom out on the hour chart, I'll show you what I've got on here. I've got the 1473 slow stochastic. You could use the 1413 stochastic, the fast or the normal stochastic. I like to use the slow stochastic, and essentially, again, read the book. Whenever it's above 80, that's this line at the top, it's overbought. Below 20, it's oversold. Simple as that. We use these things in confluence together, all of these indicators on the chart. There aren't many. I've got a long-term trend line. One thing I mentioned in my previous take of this video before it got rendered, and then I realized there was no audio. One thing I did point out really importantly is that what we want is trend lines are good. Trend lines are probably my least important part of my trading, but they are good. The more touches a trend line has, or the longer it lasts, the more likely it is to be broken. Remember that. So try and get after 2 or 3 touches. That's when the trend line is the most relevant. And here you can see the first 2 or 3 touches, and the trend line has lasted all the way down here. But we've got now 5 or 6 touches. This is the 6th touch that we're on at the moment. And at some stage, the trend line is going to be broken. Trends don't last forever. The markets break trends. The market actually sticks to ranges more often than it sticks to trends. If I zoom right out on this hour chart, you'll see that quite a lot of the time the market's actually just ranged rather than in a neat trend like we see at the moment. So when you do get a neat trend, we want to try and identify that early after 2 or 3 touches, knowing that after a while the trend line will be broken. But we've got a trend line in there. It's acting as resistance. We're looking to sell into resistance in a downward trend. We've seen the weekly trend is downwards. We've also got the 200 period Bollinger Band here, these thin blue lines. That's the 200 Bollinger Band. And we've got the 200-hour moving average, simple moving average here as well. The Bollinger Band is interesting. It's simply a Gaussian distribution or a normal curve of the markets. I'll show you something interesting on the CAD yen in a minute. And it indicates not only support and resistance levels, but it also indicates market volatility. So we get these Bollinger Bands squeezes and contractions. The Bollinger Band is named after a chap called John Bollinger, who I almost met in Australia 20 years ago, who wrote this book, his book called Bollinger on Bollinger Bands. And he simply took general mathematics and statistics, the Gaussian or normal distribution, standard deviations, the concept of standard deviation, deviance from the mean, deviance from the average, variation, and distribution within the Gaussian curve. And really, what to sort of summarize it, the Bollinger Bands that you see on the charts are 2 standard deviations away from the mean. So the 200 period Bollinger Band is 2 standard deviations away from the 200 period moving average. And you could go to 2.5 or 3. You can actually change your Bollinger Bands if you just right click on here. And if you don't have trading view charts, you should get them. They're really good. And when you go to inputs, you can see you can change your standard deviation to 2.5. When you get to 3 standard deviations away from the mean, I could change that to 3. The chances of the price going beyond that level drop to under 1%. And you can see whenever we touch the 3 standard deviation Bollinger Band, we often get a reversal. But this happens very infrequently, and but when it does happen, the price is unlikely to extend beyond there. But we use the two standard deviation Bollinger Band because something like 69% of the time, can't remember the exact figure, the market will stay within those levels, and they act as good support and resistance levels. But they also act as an indication of volatility. So when the Bollinger Bands contract, we have periods of low volatility, and we get a Bollinger Band expansion after that. And it's a pretty good indicator, something like a volatility index. But we'll talk about that on the CAD yen chart shortly. And I got distracted. But these are just sort of live videos, so bear with me on this. So what we've got the Bollinger Bands, the 200 period moving average. I've got a couple of horizontal lines of support and resistance. I've got the 1473 slow stochastic, which indicates overbought and oversold conditions. All of this is explained in the book, so I don't want to go too much into it. I'm trying to show you the setups on these charts currently and the trades that we're in. On the euro, we've come up to the downward trend line. We've actually just broken through the 50% retracement level. In a good trend, in a strong move, we want to see the market move to somewhere between 38 and 50% of a retracement. So I've drawn the move from this high down to this low, and there's the 50, 61.8, 78.6, and then the start of this move down. In a decent trend, in a strong trend, we want to see a healthy retracement to somewhere between 38 and 50%, and then we want to see a continuation of the move down. We also want to see the price move up to something like a trend line, a horizontal line, a Bollinger Band, a Bollinger Band, sure. We haven't got to a Bollinger Band here on this chart. A Fibonacci. We want to see the stochastic overbought. Here we have an overbought stochastic. We have a weekly downtrend. We reached the 61.8% Fibonacci level. We've poked through it, admittedly. I'm a little bit concerned about this. If you have a look at this on the weekly chart, as you saw earlier, we've got a spike low on the weekly chart. We've also got a spike low on the hourly chart. You can see we've gone through the Bollinger Band and formed a potential head and shoulders reversal, a spike low. We had an oversold stochastic there, so it was a good opportunity to buy actually. And we've now moved up to this red horizontal line and the downward trend line. It's worth taking a small short trade here. It's not the best. We haven't reached the 200 period moving average, and we haven't reached the 200 period Bollinger Band at the top. So we're not near any of those two indicators, which are pretty important, but we are in a downtrend, and we have reached resistance, the Fibonacci level. We've reached the trend line, we've reached this red horizontal line, and we've had an overbought 1473 stochastic. So all of that looks good for a move down if we can hold beneath here, really. Remember, at some stage we're going to see this trend line broken. The longer the trend line becomes, the more likely it is to be broken. This trend line is really long on the hour chart. If we switch across to the 4-hour chart, you'll see the same sort of thing. And you'll also see a spike low and an engulfing candle really on the 4-hour chart. That 4-hour candle there is a bullish engulfing candle. Very, very significant bullish engulfing candle. After having broken down through that support, we formed this big reversal candle, and we're now just moving up towards that trend line. So even though that trend line is still intact on the 4-hour chart, it's hard to say, are we going to reject from this trend line and move back down, or are we going to bust up through it and start to make new highs on the euro against the US dollar? I don't know. And remember, the G7 system I use as a guide. It's kind of there to put things into perspective. I think just by looking at this right now, you can see, yeah, okay, we've got a 4-hour reversal candle. It's a bullish engulfing candle. We made potentially a false breakdown, but we do have a downward trend line. We did have an oversold stochastic on the hour chart. Overbought stochastic on the hour chart. We are at this trend line, which has so far held pretty well. And on the hour chart, there's every chance that this could move down. However, I don't know about this. I'm not too sure. It's a bit tricky. We've got plenty of space above us, and we've had that 4-hour reversal candle. The reason I took this trade is because I'm also short on the dollar yen, and we'll have a look at that one just now. And so this is, and because I'm unsure of the currency markets right now, I'm actually hedging the dollar yen trade. So I'm short the dollar yen, in other words, short the dollar on that trade. And here I'm shorting the euro, in other words, I'm long the dollar. So I'm in opposite directions against the dollar on these two trades. And a lot of you smart traders will say, well, why don't you just short the euro yen or trade that cross rate, which is something that I'm interested in doing, actually. But that doesn't show up on that chart particularly well at the moment. So that's the euro. So I just wanted to point out really in this video that these G7 indicators, the 200-period Bollinger Band, the 200-period moving average, the 1473 stochastic, and then the use of Fibonacci's, horizontal levels, and trend lines. And the only thing we then look for is reversal candles. So once we've got all of that set up and we see a good entry level based on those, we look for a reversal candle. We don't have that on the euro just yet. If anything, these candles are moving higher. It's probably not a great trade to enter this, but because I'm unsure of the dollar yen trade, I've kind of hedged it with this one. And the markets are really, really difficult at the moment. Look at this messy movement since the 30th, Tuesday. It's now Thursday. So move up, breaking above those highs, back down again, back down, breaking below that low, and then back up, a new low, back up, and then a low, back up. It's a real messy, choppy chart, very difficult to trade. But as I said, if you put that into the G7 trading system, just zoom out a little bit, just like that, makes it all look a lot more sensible, a lot neater. And although you might not win the trade, you might not get the right idea, at least it puts everything into perspective, and you can make a judgment on the overall direction of the market. To me, this looks like it's possibly slightly bullish. We'll have to wait and see. We've got a stop loss above this 78.6% fib, and that's at 1.0723. Our stop loss is at 1.0730, somewhere around there. So that's that one. Now let's have a look at the dollar yen. I'm going to ignore all the other ones. We've got the euro yen here as well. But we'll come to the euro yen. In fact, I'm going to try and get through this really quickly because there's a lot to say. Dollar yen, same thing. I've got the chart set up. G7 indicators, the 200-period Bollinger Bands, 200-period moving average. We've got a trend line which has now been broken, and structure which has now been broken. We've retraced back up to that horizontal line. We have a spike high here. There's the 1473 stochastic. Let's zoom in a little bit. We see that the downward trend line has been broken. That's the first thing we notice. Second thing is we moved from that high, from that spike high, which was at equal height to this previous high. So double top there on dollar yen. If you have a look at that on the 4-hour or the day chart, you'll see that as a double top on that chart. And not only is it a double top, it's a tweezer top, It's perfectly the same height to those two candles with a bearish engulfing candle, or a bearish candle engulfing the candle 2 days ago. So overall on the day chart, pretty bearish. Although we are in an uptrend. If we have a look at the weekly chart on this, the first thing you always do, look at the weekly chart. You can see we've got consecutively higher highs and higher lows. But we do have this tweezer top that we saw on the 4-hour chart, and this candle now beginning to move lower on the weekly chart. So we've got an uptrend, consecutively higher highs and higher lows. The direction overall is upwards on the dollar yen, but we're trading this counter trend. There's no reason not to trade counter trend trades on occasion. And a lot of that depends on your own experience and your judgment, but you can still use the G7 system to give you turning points and areas and levels and ideas like this trend line break, like this retracement to the 50% Fibonacci today. In a good trend, like I said, you want to retrace 38 or 50%. Those are the two good levels. If we get to 61.8%, which is that level in blue, slightly above us, where this big spike high candle is, that's also a bearish sign. Once we get to the 618, we can get into the same trade with a tighter stop loss. That's okay. The chances of winning the trade, that's the sort of golden ratio, 0.618, remain pretty good, really good, but not quite as good as 50%. We don't really want to go more than a 50% retracement. We've got to exactly 50% today. It'd be nice if we stayed beneath that. If we get to 78.6% Fibonacci, the 786 fib, the famous, my favorite fib actually, if we get to the 78.6% Fibonacci and reverse there, the chance of a reversal at that point become significantly lower. But if you do reverse at the 786 on a day chart, 5-minute chart, 4-hour chart, 1-hour chart, no matter what you're looking at, 15-minute chart, and you get a clear and confirmed reversal at the 786, often the move from there is dramatic, it's explosive, it's violent, and extremely profitable. And so those are always opportunities that I look for, even though they may present a higher risk of entry, until you see a confirmed turn, of course. But we're not anywhere near the 786 or the 618. We've turned at the 50%. Look at the stochastic, it's overbought. That's the slow stochastic. It's not actually quite overbought and it hasn't turned yet. But what I do want to point out is if I change this to a normal stochastic, in other words, I get rid of the slow part, which is the 7, the smooth stochastic, get rid of that and change that to 1, you can see we're actually overbought and we've turned. So that's the fast stochastic, or the normal one, not the slow one, which I prefer to use, or the smoothed stochastic. But this is too jiggity and jaggedy for my liking. I don't like the noise that you see on here. I want to see a nice smooth stochastic. I don't want to complicate things with messiness and noisiness. But you can see here it has been overbought and it has turned on the normal, fast, unsmoothed stochastic. I'm going to change this back right now. But I prefer the 1473. Gives you the same information more or less. It is smooth. It's a bit slower, but it's cleaner and it's neater and it's more peaceful. We don't want noise in our trading. We don't want lines jigging and jagging everywhere. Try and keep things smooth, simple. You can see how much I've got on this chart. Very, very little. I've got the stochastic, Bollinger Bands, moving average, a couple of lines of Fibonacci, and then the only thing I do is look at the candles, and let's see what we've got here. And why did we sell this pair? Well, we've got a tweezer top on the hour chart. That candle there, the turning point at the 50% fib, overbought stochastic, horizontal line of resistance here, this black line, at the same level, at the fib level, and an hourly tweezer top, almost a dark cloud cover candle. If you don't understand candle patterns, and these are the triggers, the candle, so everything else on this chart is just there to set the scene. The trigger, or the trigger, the thing that makes you take the trade is the candle reversal. And we're looking for candle patterns like dark cloud cover candles, like engulfing candles, like tweezer tops and bottoms, like pin bars, some people call them. I call them spike highs or lows. Some people call them wick highs and lows. We're looking for doji candles, dragonfly dojis. On stock charts, we're looking for things like island reversals and abandoned babies. There are loads and loads of books on it, and the best books are the Steve Nisson books, Nison, Steve Nisson. But you can get a lot of this information from Investopedia. You can get a lot of it from my YouTube channel. I've got loads of candlestick videos on there. Have a look at some of those. Absolutely crucial. These are the trigger. This is the sort of Smith & Wesson 45. That's when you pull the trigger, you enter your trade, and you commit. You walk straight into danger. It's a funny thing about trading. One of the unique things about trading is that we willingly place ourselves at risk every time we take a trade. Human nature is to walk away from risk. When you're trading, when you're a currency trader or a stock trader or an options trader, a futures trader, whatever you're trading, you're deliberately placing your money or the money of others at risk whenever you take a trade. That's a really difficult thing to do. It goes against everything inside of our human psyche, but that's what we do. And what we need is a trigger to really trigger us into that risk. And what we have here, so that those are candle patterns. What we have here is this tweezer top, almost dark cloud cover, not quite. Dark cloud cover candle needs to extend more than 50% below, in this case, below the body of the previous bullish candle. We got to about 50%. You need to be a little bit further for a dark cloud cover, and actually you need a higher high. But we've got a tweezer top combined with something almost like a dark cloud cover, and that's our trigger to enter the trade. Everything else is in place, except we're not near the 200 period Bollinger Band or near the 200 period moving average, but everything else is there. And we've got this previous spike high, which indicates a failure to move through these levels a number of hours ago. And we've got this double top and this big reversal here off the top Bollinger Band. The Bollinger Bands are great reversal points, and you'll get your best probability setups when you're at or through the 200 period Bollinger Band. Let's have a look at the last one. That's the CAD yen. And we could actually have a look at the euro yen, but let's just, I think, stick to this. Similar thing here. Here's my G7 chart. I want to point out the Bollinger Bands on here to you. Here we've got the stochastic, overbought stochastic, 1473. We haven't reached any of the Bollinger Bands or the 200 period Bollinger Band top or bottom or the 200 period moving average, but we have retraced up to this previous resistance level. We've just poked through it actually, but you can see that red line. You can see if I just move that up a wee bit and draw it at the bottom of those candles over here. And if you're in doubt, sometimes just cut off the candle wicks. And I do this often, particularly in stock market trading. I cut off the candle wicks because that's just sometimes noise. And it's the body of the candle, the closure of the candle, that's really important. So if I draw that line right there at those lows, you can see it's a previous low support level. That's flipped. It's become a previous resistance level, and it's now currently a resistance level. So support becomes resistance. It's on the 618 fib. We've got an overbought stochastic. We've got a reversal candle. Do we have a reversal candle? Let's have a look. Let's see what happened. A couple of candles ago, we got a dark cloud cover candle. Higher high. Let's have a look closer. Slightly higher high than the previous candle. Off that resistance, overbought, etc., etc. Fibonacci level. This candle body closed more than halfway down the previous candle body after making a higher high. That's a dark cloud cover candle. We took an hour or two to sort of work through that, but this is the current hour. This is live as I'm recording it, and we're now falling back in and starting to move down. Perfect entry, and our stop loss was very tight on this trade, just above here at around about 30 pips or so. Really tight stop loss, particularly for yen pairs. So this trade's working out beautifully. Let's switch across to so we're short on that. We're short on the dollar yen right now, so that one's also working out beautifully. And we're short on the euro against the US dollar. That one, well, that's kind of in the balance. We'll have to wait and see. We've got 20 minutes before the hour rollover. Remember one more thing. I'm going to jam pack a lot of stuff into these videos, which will pop out. So when you watch these videos, make sure you watch them from the beginning to the end, because there are often little gems of information, things that I remember as we go along. Remember, this is unscripted, so I don't have a script in front of me. I'm just talking to you one-to-one, really, looking at the charts. There's no script here, so things will pop out, things that I remember, things that I find that I suddenly realize are important that I may not have explained before will pop out, and you need to watch the entire video to make sure you get some of those gems that do come out. I think they're gems anyway. Before we switch across there, I want to show you something on the Bollinger Bands. We're going to have a look at the euro yen shortly after this, very quickly. Look at these Bollinger Bands. You see the contraction that we've got on this Bollinger Band. Bollinger Bands are close together. That means the standard deviation has narrowed. That means the Gaussian curve distribution has narrowed. That means we could expect some explosion of direction and volatility, an aggressive move, something that's going to get us out of what's called a Bollinger Band squeeze. God bless you, John Bollinger. I love Bollinger Bands. I love the statistics. My background's in applied mathematics, so I love anything to do with maths and stats. And it's really simple. Gaussian distribution, normal distribution, and applying it to trading charts is fantastic. The same as Fibonacci levels. I love Fibonacci levels, absolutely, always have for over 20 years. And I'm going to do lots of videos on Fibonacci's, not only extensions, not only retracements, but also various other Fibonacci tools that you can use in conjunction with slightly more esoteric ideas. But let's have a look at this Bollinger Band idea. We've got a Bollinger Band squeeze. That's what he calls it in his book. And when you get a Bollinger Band squeeze, it's followed often by an expansion, an area of contraction, followed by expansion. And you'll see it all over the charts all the time. If I can just carry on. So there we get contraction followed by expansion. And that expansion is always directional. So it starts the beginning of a new move. There's contraction there, right there. And then the Bollinger Bands, look how they start to explode outwards. And you get this move in one direction. It's not often over here. We've got expansion, but the move isn't directional. It's up and down. It's completely nuts. But most of the time, when you get a contraction, a Bollinger Band squeeze, it's followed by a Bollinger Band expansion and a directional move. You'll see it here, over here as well, directional move. You'll see it here as well, a directional move. Bit of faffing around, a little bit of a squeeze there, directional move up and down. And here we've got a really good squeeze going on. So the next move is going to be a big one. And you'll see this over and over and over again. There we've got contraction, Bollinger Band squeeze, followed by expansion and a directional move. You'll see it there as well. Contraction, expansion. So these are things to look out for. Just really simple. Look at your Bollinger Bands. Are they contracted or are they expanded? If they're contracted, expect a directional move and a strong and violent move. And that's what we're looking for right now. Bollinger Bands are contracted. If the move does take place in the direction that we're looking for, which is down, then it's likely to go all the way down, possibly down to this next trend line. Got a slightly longer term trend line drawn in here. That could take us down to 101 or 100, or perhaps even all the way down to about 97 or 98, or even 95. It's not beyond possibility at all. But you'll see something like a move of, this is 99 from 95. So a 500 pip move is not beyond reasonable expectation. So here we have a contraction. We move from 105 down to about 100. So that's a 500 pip move. And that follows here again on this area here of contraction. We move down from 109 down to 105. So that's a 400 pip move. So when you see these Bollinger Band contractions like we've got right now, you could expect a 400 pip move one way or the other. And at the moment, looks like we might be in the right direction. Let's hope for that. So that's all of that. Now, last thing I want to look at is the euro yen. Remember, I said, so if we're selling the euro dollar and we're selling the dollar yen, why don't we just sell the euro yen? Well, we could have done that. And euro yen actually looks quite good. Let's have a look at what we've got. Now, this is even better than the other ones, and I'm going to quickly try and explain to you. We're at the 200 period moving average. Look at this beautiful level of support and resistance. Look at this. Right there. All right, that red line there is at the 200 period moving average on the hour chart. We have a spike high. It's also the 50% Fibonacci level. It's also we also have an overbought condition on the stochastic. We don't have a reversal candle just yet, but we might do in the next 15 minutes. It's 1:45 the top of the hour. Remember, only look at your charts every hour. You don't need to trade every 15 minutes, every 5 minutes, every 23 minutes. It's the top of the hour that counts. Look for the hourly candle formation. There's a good example there. Top of the hour, reversal candle, and off we go. Top of the hour, you get these wick highs there. Top of the hour, wick high. Bottom of the hour, we got these wick lows down here against the Bollinger Band. Beautiful long entry there. That was in the middle of the night, I think, my time. And then now we're approaching this 200 period moving average, overbought stochastic, 50% fib at around 149.80. We got up to about 149.70. So a little bit of space above us to go. We don't have a reversal candle yet. We've got 15 minutes to go. This may or may not turn out to be a reversal candle. However, in the trades that we're currently in, we're effectively short euro yen because we're short euro dollar and we're short dollar yen. So we're actually trading this cross short already without even knowing it, in case you're not aware of that, which I am, and many of you will be anyway. So that's it, really. Those are the setups. Now, I've got nothing on pound, but let's have a look at the pound quickly. Direction for the pound is generally, let's have a look. Let's go quickly and have a look at the weekly chart. Quick. Weekly chart on the pound. We've got lower highs and lower lows on the weekly chart. There we go. Simple as that. So we know the overall direction is down as long as we don't break above last week's high. That's there. That's last week's candle. As long as we don't close above that or break above 1.247, we'll call it 1.2480, we're still bearish. That means we're looking to sell the pound until we break above, let's say, 1.25. We're at 2.460, 70, 80 right now. So go back to the hour chart. It's really as quick as this. It's simple as this. Where are we on the chart? Well, stochastic's been overbought. In fact, we've got some stochastic divergence because the stochastic was higher when we were over there. Now we're up here and the stochastic's lower, so some stochastic divergence with a previous overbought situation. We're at the top Bollinger Band. There it is there, the top 200 period Bollinger Band. The overall weekly direction is low as long as we're below 1.25. Remember we said from the weekly chart, so we can draw a line in at 1.25. We know that or 2.480. Let's be precise. There, that level there is the weekly high from last week. So we don't want to be above there. As long as we're below that red line, as long as we're below this, as long as we're touching this Bollinger Band, below that red line, overbought stochastic, everything looks great for a short trade on the pound against the US dollar. But the only thing that's missing right now is a reversal candle. It looks very bullish at the moment. We don't have any indication that this is going to turn around, so there's no trade on the pound at the moment. But it might be that in the next hour, the top of this hour, the top of the next hour, in several hours' time, later on when the US opens, we might see a reversal on this chart, in which case we'll sell the pound against US dollar with our stop loss above the reversal candles. Well, I hope you found that useful. This is video number 1 in how to trade the G7 system. It's going to be in the library. I'm going to put a library page up on my website with members only access, but I will put the links up in the Telegram as well. It's not going to go on YouTube. This is part of the members only training stuff. So enjoy it. And if you've got any questions, I'm in Telegram every day. Go and have a look, see what I'm saying, see what other people are asking, ask your own questions. Please be interactive and let's make this experience useful for everyone. Not only yourself, but especially yourself, but everyone else as well. And I hope you've enjoyed this. So that's it, really. Uncut, unedited, uncensored. I could say a few swear words on here, but I don't generally swear, so I'm not going to. In fact, I seldom, almost never swear. I don't know why I'm even talking about that. Right, so that's that. So by the way, last thing is, these are the currencies that I'm looking at the moment. You could have any charts on here. You could have the gold charts on here. I've got all of my other charts set up in different fashions. We're long on gold. There's gold, by the way. If I have a look at the gold chart, I'm sure I'll see a pretty good entry on the G7 system. That's the gold day chart. You could, no matter what you're trading. And sometimes for me, it'll be these majors, euro. The majors for me are always the euro dollar, pound dollar, dollar yen. And then along the bottom here, I've got all the yen crosses, which I'm interested in trading at the moment. But it could be Australian dollar, US dollar, it could be CAD, US dollar, could be CAD yen, could be any, well, we've got CAD yen, any currencies that I'm particularly interested in. Try not to trade too many at the same time. You really only need, actually, probably just the majors. And in the classic G7 system, I'd have the majors across here, euro, pound, and yen. And at the bottom here, normally just daily or weekly charts for the same currencies. But perhaps you could put 6 currencies on a screen like this and have all the hourly charts. And if you want to look at the weekly charts, you saw how we just flipped between them. So you just, so if I I want to look at the direction for the weekly chart on pound. Just go there. You don't have to take all the indicators off and everything. And just switch to the weekly chart. And all I want to know is, are we making lower highs and lower lows on the weekly chart? And yes, we are, until we break above that red line. Until then, we're short on the pound. When we do break above there, we stop our shorts and we stand aside until the week closes, and we ignore that currency until that period and see how that weekly chart looks. And you can look at it on the weekend. What does the weekly chart look like on Saturday afternoon after you've watched whatever you watch? For me, it's Ted Lasso at the moment on television. And have a look at your weekly chart. You know immediately what the direction is for the week, for the coming week, and you can start to plan your trades and put these indicators on. It's a fantastic, easy, beautiful system to trade. And like I said, I've been trading it for 21, maybe 22 years now. Take care.